We are going to bring you part 2 of our interview segment as we're looking at Nigeria losing its Africa's top oil producer status to Libya as its crude oil production fell further last month amid lingering supply disruptions. According to a new report by the Organization of the Petroleum Exporting Countries, Nigeria's oil output fell to about 1.23 million barrels per day in the month of October from about 1.25 million barrels per day in the previous month. Libya overtook Angola as the second biggest producer on the continent in December last year and saw its oil production rise to 1.24 million barrels per day in October from 1.16 million barrels per day in September, based on direct communication. Despite this development, some of the major downstream oil and gas marketing firms in the country jointly posted 776.6 billion naira as revenue in the 9-month period of 2021, growing their top line by at least 34% from 579.59 billion naira recorded in the corresponding period of last year. Well, to discuss this and much more and other issues within the oil and gas industry in Nigeria, I have joining me live virtually energy analyst Joseph Nwakue. Good to have you on the show today.
Good afternoon. Pleased to be here.
Nigeria losing its top spot now to Libya, and then we also have close competition from Angola as well. What do you think this report means for Nigeria, especially at a time when we are looking at ramping up production, conversation around refining and doing much more within our oil and gas industry, looking at the implementation of the PIA as well?
Well, I think it's something that we saw coming. It's been on for the declining rate in production and output that we've seen in the last couple of months is not just driven by COVID. It's driven by the investments we didn't make in the last 5-6 years. So it's not surprising that that's the case. However, I am not very worried about position. I mean, it's not a race. The truth remains that we do have a lot more developed capacity today than Libya. So I'm not really worried. If you look at the monthly F&O report that NNPC produces, it shows that, for instance, in August, we still have about 175,000 barrels short in due to sundry issues ranging from sabotage to equipment failure and all that. So if we cleaned up our acts, we will be able to restore those volumes very quickly. And so I would think that our capacity is somewhere in the 1.6 million a day range. So it's the decline is there. Remember, we used to do 2.2, 2.5 and all that. So yes, we've seen decline, and it's due to underinvestment over time. But I hope that with the PIB, we'll be able to reverse the trend.
And talking about reversing the trend as well, let's look at the state of our refineries, the implementation of the PIA, and also the prospect for the oil and gas sector in Nigeria. How do you see things playing out going forward come the year 2022?
Well, 2022 is here. We're looking at just a month away. I think the PIA implementation will continue, and I hope that they can ramp up move faster. So we will not start to see. I think there are components of it that will fundamentally or radically change the landscape in the industry. We're looking at, for instance, removal of subsidies. I understand that they are planning to do that in the first quarter. So that would change the dynamics quite significantly. There are a few other things that will happen, but I think that we are not going to start seeing changes in the upstream in the near term. I think that our capacity in terms of growth will start building. So 2022 for me in the upstream will be a year where a lot of focus will be on building capacity rather than taking advantage of this. But interestingly, I sense that prices will remain in this range for a while, and that will mean that we won't be under so much pressure. So I think it's 2022 is looking like a good year for the industry.
And still going back to the conversation around our refining capacity, the state of our refineries in Nigeria, they're relatively within a poor state, if we want to call a spade at this point in time. Now, talking about how we would ramp up activities within our infrastructure base and maintenance, government has already committed certain funds, for example, the Port Harcourt refinery, to ensure that we have maintenance and a whole lot more. But how do you see this changing the narrative, bringing in new growth prospects?
Well, from what I understand, they've committed to the Port Harcourt, and I think the rehabilitation, that's what they call it. So, but no, I don't think any of them will be ready next year. So 2022 is out of it. The earliest, I imagine, will be maybe first, second quarter 2023. But it's important that we get those capacities back. Everybody thinks it's important for the country to refine its products, at least for its use. But beyond that, we equally have a huge market for refined products as Africa opens up business to itself. So I think there's a huge opportunity in the refining space. I hope that the private players, Dangote is there, Watersmith, a few other people, Niger Delta Petroleum, I hope that they can scale up rather quickly so that we do not just refine for own use, we'll be able to refine for export. I think there's no reason why Nigeria shouldn't be the refining hub for Africa. So whether it's by government or by private sector, I think is an imperative. It's something that we need to do for our economy.
And then come June 2022, according to the budget proposal we have been presented and which is under scrutiny, we are likely going to see an end to fuel subsidy by June 2022. Some also have the view that, well, there'll be a further extension, so there's no room for clapping already in terms of bringing an end to the subsidy regime. But at the end of the day, looking at how we also refine and how much we're spending on importing, how much we're spending on subsidy, how do you see the landing cost now take a cost-reflective pricing within the market now? That's one of the biggest conversations. The NNPC still remains the sole importer, and then we're looking at subsidy removal also coming into bear. With our production capacity space and looking at the fact that we don't necessarily refine and we still largely import and we have subsidy, how do you see things really playing out within the first half of 2022 and then the second half when subsidy regime should come to an end?
Okay, I haven't seen a plan. We hear that, yeah, they would like to do that sometime in June or so. But there's really no plan. I haven't seen one, at least. So it's important that we see one and everybody buy it. Subsidy removal is a journey. It's something that needs to be properly planned. Otherwise, it will fail. And if it fails, everybody will hurt more. So I think it's something that we need to pay attention to. It's not just about pronouncements. There's some work to be done. Somebody needs to roll out a plan and get stakeholder buy-in. It's so critical. There are many stakeholders in this business that their buy-in and participation in that journey is key. So it's not just something about budget and all that. There are fundamental issues that needs to be addressed. I will just list a few. Right now, we have a single source for products. You couldn't just remove subsidies and still have a single source. That doesn't work. So we need to liberalize the supply side of the market. And how do you do that? The marketers, all the other, whether it's independent or the major oil marketer, they need to get back into the business of importing petrol. But they wouldn't be able to do that because right now they are challenged with access to Forex. So there are a lot of structural issues that need to be resolved. My view is we need to deregulate the sector, and the earlier the better for everybody. And there's work to be done. There is some planning that needs to be done. It's not just about pronouncements. We need to get all the stakeholders have to be involved in rolling out a plan that everybody will participate in ensuring its success. It's so critical to the economy because it's a big elephant in the room. Subsidies are gulping quite a significant portion of our resources, and I don't think it's sustainable at all. So we need a plan. We need a plan. We need people to buy into that plan. It's not just something you it's not like a light switch. You put it on and off. No, this has to work, and it has to be properly planned and implemented.
Well, you shared your optimism about Dangote refinery coming on board and also bringing some ease into the oil and gas market in Nigeria, also looking at pricing here and there. But some also say, let's take a circumspect look at the conversation around modular refineries. What are your thoughts on these?
Well, modular refineries are good. They serve two basic purposes. One, it's like an infant industry. So you're trying to get people comfortable with the refining business. And then with time, the expectation is with time, they will scale up to where they will start doing PMS. Remember that most of them are topping plants. Topping plants, they're not doing PMS. So they are doing heavier stuff, intermediates, diesel and all that. So with time, they will get a cracker or some equipment that will allow them to. So it's a way, but then they would have developed the skill set and all that to proceed to more complex refining processes. So that is the essence of modular. The modular refineries will not solve our PMS supply problem in the immediate term. Let me put it that way. No, they won't. You need refineries on the ground. I'm glad Dangote is coming on stream. I hope the other ones that have FID projects should fast track those projects. I understand BUA is planning to do one in Akwa Ibom and a few other places. So when we need multiple sources of products. That's the only way you will really have a competitive market in the real sense of that word. What the PIA says is that pricing will be competitive. It won't be competitive if you have a sole supplier in the market. That won't happen. Even if you take away subsidy, let's recognize the difference between just taking away subsidy and a liberalized competitive market. So those are two different objectives. I think what we need is to fully liberalize the market. That way you're not talking of subsidies. That way you have sufficient enough supply sources that the forces of demand and supply will kick in. I think it would be better for the consumer at the end of the day.
Thank you very much for your time on the show today, Joseph Nwakue. We'll keep our fingers crossed and see how the full deregulation of the sector will take shape as we are clearly going into 2022 and also setting new prospects ahead. Thank you once again for your time.
Thank you very much.